SoFi has just posted their quarterly results and wow, we need to talk about these numbers. We actually decided to invest in the company, but it might not be as straightforward as you think. Our thinking is that SoFi is going to be an amazing short-term investment for the next 6 months, but may not be the best investment for long-term. We will explain about that. SoFi has a lot of news recently with both new offerings, and I will prove to you why in the next couple of months the value of SoFi will go up. Hello and welcome to Market Monkeys channel. I'm Vadim. Today we're talking about SoFi, about their quarterly results and a bunch of news. But first, let's talk about why SoFi may be an amazing investment for short term. So you have probably noticed that since mid-summer, SoFi stock has surged about 60%, maybe even a bit more. Most of this surge happened because of Fed's rate cuts. And I have seen many investors kind of talk about how their stock is going to be affected by these rates, but the truth is most of them are not. So Nvidia as a business, as a company, is not really affected by Fed's rates. Microsoft the same, but SoFi is totally different. SoFi as a business, I'm not even talking about the stock itself, it is directly affected by Fed's rates. To put it in simple terms, what SoFi does is banking. Most of their revenues coming from loans. So when Fed cuts its rates, SoFi is getting more money in two different ways. First of all, from better loans. So for example, if you want to take a loan and you get a call from a banking company and they're saying, hey, would you like a loan? We are offering new loans with 10% yearly. And you're like, are you crazy? 10%? I'm not even going to consider this because this is a high percent. Or the other situation when the same company calls and offers you a loan with, for example, 3%. It looks much better to you, it is much better to you, but for financial company, the margins are pretty much the same. It all depends on Fed's rate. So SoFi right now, when rates are lower, are able to offer you better looking loans. And that way they can offer more loans and kind of have more growth in the revenue. The second thing is having to do with how book value for financial companies are calculated. I'm not gonna go into kind of the whole details of what book value is, why 50 years ago it was very important and right now it's not. But when we look at the value of SoFi as a company, we are looking at the value of loans that SoFi is giving. And what is a loan for SoFi? It's just a stream of payments which is coming from their customers. When they need to create a present value of these payments and calculate how much all these loans are worth, if you discount it with lower rate, you are getting a higher value. So every time Fed goes and cuts rate, the value of SoFi as a company gets bigger. It's not a perception of the stock will perform better or something like that. No, Fed actually has a lot of influence on how SoFi as a company performs. And this is one of the reasons why SoFi did so great in, for example, September and October, because Fed cut its rates by 50 basis points and it has announced that, well, not announced, but it's widely speculated that they will cut more rates this year. Now, talking about growth and margins, there are two pieces of news which we need to discuss. The first one with the company which is called Fortress Investment Group. So Fortress Investment Group is going to give loans with SoFi's help. SoFi will do the whole pre-screening of customers, get the customers, but loans themselves will be done by Fortress. SoFi will get a cut or a fee of this whole deal, but the money will not be theirs, the risk will not be theirs again. SoFi will just get a small percentage of this deal. So of course this will boost the revenue of the company and will also boost their margins, which is probably more important. The second piece of news is the deal which SoFi did with Nova Credit to use their Cash Atlas software. So what Cash Atlas does is provide information about the potential customer. So when a customer wants to take loan from SoFi, SoFi need to kind of understand what is the financial situation of the customers, what is their profile, to calculate the agreeable terms of the loan, the best for the customer and the company, of course. So the more information SoFi has about the customers, the better loans they can give and the better margins they can get on the loan. So Cash Atlas will do exactly that. If you find this information valuable, don't forget to like this video and subscribe to our channel. Now let's get to the other piece of news. I will explain about our investment and we will talk about earnings. So the other piece of news, the one I'm really excited about, is DSP 2.0. So earlier this year, SoFi has introduced margin accounts, and this is something quite new because SoFi did the banking and the lending part, and now they are getting into investment and equity part. And as a continuation of all this trend, SoFi right now is introducing DSP 2.0. So what it does, it offers to non-institutional investors access to manage equity programs. This is very fancy, but kind of to simplify it, and in general, if you ever worked in the company which went public and got to IPO and you had options in this company, at some point the company actually gives you shares, and these shares need to be managed somewhere. And usually companies like using Charles Schwab or any other brokers to put your share, and then you have like the whole situation of how to manage, how to get taxes, everything. So SoFi will do all of this for you. Your company will just manage all of your equity programs via SoFi. Of course, this opens another revenue stream for the company, and it's actually a step in a very right direction, a direction about which both me and Julia, who did the previous presentation on SoFi, were really concerned about. Now let's talk about our investment and then we will go to the earnings. So we have decided to invest in SoFi, but here's the thing. I can explain to you all the catalysts for SoFi, all the good news, the rate cuts, everything, how it's going to work for SoFi in the short term. And we are very bullish on this company in the short term. The problem is we have a couple of concerns about the long term of SoFi. And in more general, we have three. The first concern is about average deposit side. As Julia found out in her investigation of SoFi, the average deposit side of SoFi's customers is about $2,600, and the average customer of SoFi earns about $168,000. So you see the problem here, right? So the people are using SoFi as their second bank. I don't know why this is. It's because SoFi is a small company. Is it because it's only online? People are not trusting it enough, but the facts stay the same. People are using SoFi as a second bank, and before we kind of invest in long term and forget about that we bought SoFi shares for the next 10 years, before that I want to see SoFi really having large deposits of people. Second thing, SoFi has a lot of customer banking but not a lot of commercial banking. And in general, SoFi doesn't have commercial banking at all. Most of the profits, most of the margins, most of the growth which traditional banks have is from the commercial side and not the customer side. So I want to see the company kind of stepping away only from its core student loans, home loans business and more into the commercial side. The third concern we have is with ARPU. As Julia found in her investigation, you can by the way go and see previous video, she kind of laid it off pretty thoroughly. ARPU of SoFi, and ARPU is average revenue per user, has been declining steadily from 2019 when it was around $450 to right now when it is a little bit above 200. So you kind of see the problem here, right? SoFi are getting more and more customers, but if average revenue per customers is getting smaller, we might not get anywhere. So we will have more customers, but the revenue will not grow. So this is my third concern. So what we decided to do is to buy call options for April 2025. And our thought is like this. We are bullish on SoFi in short term, and we think our call options will appreciate. If we see the company is moving in the right direction, all the numbers are moving into the right direction, what we will do is simply we will exercise these options and just hold the stock. If we see that the company is not going anywhere, all the short-term catalysts are kind of done and we don't see anything in the immediate future, we will just sell the call options and again, we will take some profit with us. This is our thinking, this is our way of investing in SoFi. Please share what you think about this and what is your way of investing in the company. And now let's go to the earnings. Okay, so let's go over SoFi Q3 presentation, and throughout this presentation you will see kind of the same patterns happening over and over again, and this is kind of the blessing and the curse of SoFi becoming a bigger company. So in terms of the members, SoFi growth has been the lowest in its history, only 35%, but the number of new members that were added to the company is the highest ever. As the numbers become bigger, the growth will be extremely hard to sustain. The same thing is with the products, and the products is a service which Sofi provides to its members. You will see that the growth is again the lowest they had, only 31%, but the number of products which they provided is the highest which they had in their history, more than 1 million. So the thing which is particularly concerning to me in this presentation is Galileo accounts. You can see here that they only had 2 million new accounts, and this is a growth of 17%. And this is this whole debate of Sofi. Is it a fintech company or a banking company? So for this quarter, banking is winning. Probably one of the most amazing parts of this presentation is the growth of net revenue. Net revenue grew by 30%, $689 million. The expectation was to have revenue $63 million less than it was. The growth of 30%. This is really amazing result. GAAP net income for the company was $61 million when the guidance for this quarter was between 40 and 45 million. So they beat their own guidance pretty significantly. Earnings per share was 5 cents when the guidance was 4, so they beat that as well. One of the interesting parts, and probably the part which got Wall Street analysts excited the most, is that the company raised guidance for this whole year. So adjusted revenue right now is between 2.53 and 2.55 billion dollars. So they raised the guidance by about $85 million. Previous guidance growth was between 17 and 19%, and taking these new numbers into account, we can see that the company is projecting a growth of between 22 and 23%. And this is great. Like, the company is saying they're going to grow by 5% more than was expected previously. Earnings per share guidance is now between 11 and 12 cents for the whole year, when the previous guidance was between 9 and 10 cents. So amazing results. It's no wonder stock in the pre-market right now, we are recording this before market opens, the stock in pre-market right now is flying. We have seen plus 9% in pre-market already. Let's see what will happen in the trading day today and in the next few days. Hopefully this video was interesting and informative for you. If it was, press a like button, subscribe to our channel. We will have more videos like that, and we will of course continue our coverage of Sofi. That's all for now. Thank you for being with us. Take care.